And we back once again with another Tesla video. I hope you guys are watching these and listening to them because they are the analysis from the gamma charts itself is working beautifully, and it has been. I mean, all my other videos that I did, those worked really well too. Just kind of going through the basic, just one gamma chart. But today we're going to do something a little bit different, where we're going to kind of do a 360 view of the options chain for Tesla. So stick around to go through. Now, I'm not going to say I'm an expert on each one of these charts, but I do this every once in a while. Well, I will get a 360 view of everything just to have it in my brain. That way, when I'm watching Tesla move, I can reference these charts or reference back to, I'll run a new chart and just see how it's changing, see what the adjustments are, see how the movements in Tesla or the overall market affect the options chain. And hopefully that gives me a better understanding of where Tesla is likely to go next, what kind of environment it's in, and basically just learn Tesla in and out. That's the idea, because in trading, I feel like you really only need to be a master of just a couple tickers, SPY and Tesla, maybe Apple, and that's, I mean, as a regular retail trader, that's all you really need. So that's what I intend to do as far as the options game goes. Shopify is another one that I really enjoy trading and watching. But Tesla obviously is on everybody's watch list, so it's kind of its own beast it's like its own market really, versus just the regular stock market. So anyways, first thing I like to do is look at the net GEX, which is the net gamma exposure. This picture here is total. So what the net does is it just subtracts. It basically just subtracts. It's just taking the net difference between the positive and negative, and then it'll post it up there. So you can see here where the net is pictured here. So a little bit of a cleaner picture as to this. I just wanted to show that because sometimes I'll look at this just to be kind of like, okay, where is all the gamma coming from here, and where is it all sitting, at least for because we're going to be looking at this expiry May 27th, and you can see where all that's highlighted in. And what that's basically doing is, thanks to a preferred user from the Discord, he basically got Auk, who created these charts, to add in the total gamma that's expiring for those expiries. And so that's really helpful to know if a certain expiry coming up has a lot of gamma exposure that is going to be rolling off from on that date. So if you're an options player, it's nice to have the timing down. So we got the June 17th, and you got the May 27th, 39%. So out of all these strikes, the majority is in these two expiries. Okay, so just keep that in your mind when this expiry rolls around. All this gamma that's sitting in here, all this gamma exposure, essentially is going to start having to come off. Like, they're going to essentially start having to, they don't have to hedge against it as much. The delta requirements are going to shrink to basically bring themselves neutral. They don't need it as much, and so if you understand how the dealers are going to be operating, they're going to be essentially rolling this delta off their books because they don't need it as much to essentially hedge against the gamma. This is the way I think of it. Okay, it could be wrong. This is just the way I do it. Okay, I'm just theory crafting. So that's how I anticipate it. So you got 39% expiring, and so 39% of all the gamma from here to 98 days comes off here on Friday. Where did we close? We closed at 658. We traded as high as 670, and it kind of came back down. So that was another interesting thing to me, that there was no kind of like extra effort to spike into the end of the day, and the market obviously is kind of coming down into the end of the day too, which was interesting. So I'll be watching Tesla for a possible reversal tomorrow. I'm holding calls right now, regrettably. I was in calls earlier based off the video last night, so there was money made there, but I held calls overnight, which I don't usually do, and I'll explain kind of my theory on why I did that, and we'll see if that ends up playing out. But at least for tomorrow, I'll be looking for basically you're just watching the 650 vol trigger. This is really as simple as it gets. If the market's bad and we're selling off, Tesla under 650 very easily could drop right back to 600, because it's just a battle between 600 and 700. Now you can see, I talked about this in the video last night, where we wanted to see this gamma level grow, and it did. You'll see here, you can see that as far as for 527, the gamma level did grow compared to the picture from yesterday, but the 700 stayed, or the 600 stayed about the same. So you had the 700 grow. Obviously, Tesla had a really nice day, but the 600s, they didn't even care. They just sat there and held their positions. Why is the question? Why are they sitting there holding their positions? Well, we're not running out of time just yet, so that gamma is not going to quite have to roll off, or they're still basically expecting Tesla to drop, which is very possible. So that's why we want to keep an eye on Tesla here in this no man's land area, where at 650, if that gets triggered on a big red day, Tesla puts would be very, very juicy. So this is how I'm looking at that. This is just the total net gamma exposure. Just a different look is all it really is. So again, you can see the 600 is just massive compared to the 700. So we got two different pictures showing us where the 600 is dwarfing the 700 just in total. But again, we want to look at the net. We want to look at basically just 527. So basically, which side is going to get burned? Is it going to be the calls or the puts? Now, I'm betting right now that the calls get paid versus the puts, at least in this environment, at least in the short term. So I think 527. Personally, I think there's going to be a lot of upside, but I always want to prepare for the downside. So I am looking for downside on Tesla. It's just we're in a bear market technically, so at any moment I'm expecting big red days. So I'm always ready for that. But I'm positioned long as of right now, as per the plan last night. So the delta hedging exposure. Here's something I don't totally understand how this plays into it. It's just another way of looking at it from a different angle. And this is one of the ones that I track every day, just to kind of get an idea. How is it going to change? How did Tesla react today? How did it move? And how did this picture change? And so that's just something I'm going to track. Here's the dark pool index for Tesla. It's the linear regression is showing down, and you also have a reduction. You had a huge buy the day before Tesla went crazy today, but then you didn't have as much interest in it here. But does this start kind of a trend of dark pool buying? Who knows? Because there wasn't a lot going on back in these dates. So we'll see how this sort of plays out. Right now, it's still bullish because it's above the bull bear line. So you would technically stay bull, at least in the short term, on Tesla, and as long as that stays above that line. The volatility skew. I don't know if anybody is super familiar with the vol skew, with the at the money options. This is sort of voodoo type of kind of stuff that I look at, that I don't know if I completely understand yet, but it's definitely something I track again every day. I want to see how this reacts versus how Tesla is reacting, and that way I can kind of glean a pattern or glean, some information that could teach me if this chart would be useful or not. But what I see here is that skew is extreme to the position to the downside. Okay, so Tesla closed 658. Look at the skews of all these expiries. Look at this. Look at these levels here. It's quite insane. There is a lot of interest in buying insurance against Tesla, which makes sense because Tesla's down like 50% in a few months. So this makes sense, but this seems extreme to me personally, having a skew that looks like this. Another way of looking at it is the mid-smile. Again, we're seeing for this expiry coming up, the skew is quite a bit to the downside. They're put heavy, essentially. So if you are a bear, you are going to be paying up for that insurance, essentially, because what is happening to the volatility is that to the downside, obviously everybody's looking for that put insurance protection. So they're buying puts, hedge their shares, buying puts, they think it's going down, blah, blah, blah. Everybody's buying puts. So I personally am very aware of this as potential for more downside because I'm seeing a smile like this, at least into this expiry with 39% of the gamma expiring. Somebody's going to get burned. One of the sides is going to get burned. And so I keep this in mind because if we do head to the downside, you could definitely see some bigger moves. So until this curve starts to flatten out, or basically to where this side comes up a little bit, and it might at higher expirations. I'm going to show you a chart here in a second here with unusual whales, something I was looking at today. Here's the IV distribution. So this is going to be the smile for 527. So you see how at about 735 it goes nuts. This right here got me super bullish because I haven't seen this kind of smile on Tesla in a long time. And so you can see the difference here. You don't get to see the higher expiry. So right now, Tesla closed about here or right here, and then it curves up. So that's what I was saying, where you want to see this curve up. You can start seeing the other expiries also move higher. So this is a good sign for me if you were a bull on Tesla, that you would see this moving up like that. You can also see a similar type of thing here with just the max pain, and then you can kind of see how the skew is up. So that's matching with what's going on up there at the IV. So keeping those two things in mind, and the different looks at it. Here's the options volatility at the surface. Again, you see that similar type of look. This is just the shadow of the surface of all the options for all the DTs out to 98 days. And so it's basically kind of giving you an idea of, where people are positioned or where the market is positioned. And it looks a lot like this, right? It looks a lot like this. So very similar look to it. Another thing, I'm not real sure, but this is just all of these charts are in Investors Haven's Discord. I'll leave the link in the description. Just go to the bot commands section. I'll show you exactly where that's at. So once you're in Investors Haven, you can just go to bot commands right here. And here's where you'll be able to type in these commands right here. You can just type in exclamation help, and you can get all these different looks. And there's even way more that I haven't even looked at yet. There's even a random yellow play, so really cool. But you can look at the Vega hedging too. So this is new for me. I'll be looking at, potentially seeing if there's any edge that I can glean from looking at the Vega hedging. Vega being the, I guess the sensitivity of the options price to, I think it's the volatility. Again, I'm still kind of sketchy on the Greeks and stuff like that, but definitely be studying this type of chart a little bit more. But what's interesting is that you see a ton of Vega hedging here at 700. So, but it's negative. So that's interesting to me. I want to see how this kind of works itself out. I'm not exactly sure how yet. Same thing here. This is going to be the Vega hedging exposure. This was the net, and so here's the total. So again, you see those big levels. I mean, they're all going to get, you know, maybe this is why Tesla was coming down again. And then there's the delta hedging, net delta. So again, this is a chart I'm not exactly sure about yet. The gamma exposure stuff, you know, dark pool, that's easy. I understand how that works. The IV smiles and things like that, the skew, I get that stuff. But the delta Vega hedging, not sure about yet. So these are things that I will be obviously doing more videos on as I learn about them. But so this one's interesting too. You see the net delta hedging is all negative to the upside. And so not sure how that fits into the picture here, and we'll see. We'll see if this picture here essentially would this be considered, you know, resistance? I mean, for Tesla to move higher. So I'm definitely interested. Their net negative delta hedging, you know, it strikes above where the price is. So we'll see. Maybe this creates some kind of squeeze, or maybe it acts as resistance. We're gonna look and see in the future. But my normal method of looking at this is going to be, you know, basically as long as we're above the 650, the market maker is going to be buying dips, selling rips, which reduces the volatility. If it reduces the volatility, if IV is coming down, or if VIX is coming down, what's happening to all the puts, all the people that are exposed here in puts, their puts are losing value. And so what happens when they're losing value? Eventually they reach their point where they got to close them out, or the dealers start closing them out because they don't need to hedge against the delta. What that's gonna do is cause this exposure to shrink, and it's gonna push price higher. And that's where we get this 700 acting like a magnet. We know if price starts getting pushed higher, the expected range 680 likely to get tagged 700 as a high. And you know, another day goes by, this picture can totally change. If they build out this 750 or these 740s, that's where you're basically saying, okay, Tesla has some more juice to it. So this right here is my main bread and butter picture of how to gauge whether Tesla is going to be going up or down. Another thing too is looking at the GEX. The GEX was positive all day. It flipped positive, as a matter of fact. And that's another thing. So total GEX is minus 15 million. The GEX flipped positive to about almost 10 million, and then it dropped a whole bunch here to 2 million, but it stayed positive. It closed positive. So if we want to see this total GEX flip positive, we want GEX for 527 to stay positive, flip positive. And we want to go long-term, non-volatile, essentially, in order to start really putting the pressure on the puts. So hopefully this video, it's a little bit longer, but hopefully it helps you out. Link in the description to the Investors Haven Discord and my Discord. And follow me on Twitter, and like and subscribe. And share this video. Peace.